Good morning, good morning, good morning, good morning. Good morning, good morning, good morning. Can you hear me? Can you hear me? Morning, can you hear me? Can you hear me? Can you hear me? Can you hear me? If you can hear me, drop a comment. Drop a comment if you can hear me. Drop a comment if you can hear me. If you can hear me, drop a comment. How has been your week? I hope it's been profitable. Drop a comment if you can hear me. Can you hear me? Can you hear me? Can you hear me? If you can hear me, let me know in the comment section. How has been your week? I hope it's been profitable. Can you hear me? 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 Good morning, good afternoon, good evening, depending on where you're connecting from. Can you hear me? Can you hear me? Can you hear me? Can you hear me? You're welcome to today's live stream. You're welcome, you're welcome, you're welcome. If you have any question or any pair you want me to analyze, let me know in the comment section. If there's any pair you want me to analyze, let me know in the comment section. Please confirm you can hear me loud and clear. Confirm you can hear me loud and clear. You're welcome, you're welcome. How has been trading this week? My week has been great. My week has been profitable. My week has been profitable. So far, I've made close to 200 pips. 200 pips between Monday and today. Buying Euro USD and GBP USD. Euro USD and GBP USD. I've made, I think, yeah, close to 200 pips here on those two pairs. How has it been at your end? Okay, I want to believe you can hear me, so let's go straight to business. Let's go straight to business. So we'll start by looking at the fundamentals for the day. Okay, so today is Wednesday, the 15th of October, and the only major news we have today will be coming from Australia. Governor Bullock will be speaking by 8:45 p.m. Nigerian time. That is the only that will be released today. Okay, so let's go straight to the charts. So we'll start by analyzing the DXY, dollar index. Why do we analyze dollar index? We use the dollar index to define the trend of the dollar to know if dollar is bullish or bearish. We don't buy or sell the dollar index. We just use it in defining the trend of the dollar, the strength of the dollar. Okay, so what can you see on dollar index. Now, as a day trader, I start my analysis from the daily time frame. As a day trader, my analysis starts from the daily time frame. Okay, I need to know the trend for the day. Okay, so but my execution is done on a lower time frame. But to know the trend for the day, I use the daily time frame. Okay, I use the daily time frame. So here, so yesterday was strongly bearish, as you can see. I took advantage of this move yesterday, and today so far the dollar has been bearish. The dollar has been bearish. Okay, bearish. And what can you see on the daily? Also, you can see we have this fair value gap. I would love to see dollar index fill this fair value gap before going bullish. Okay, but the close of today's candle will determine the direction for the market. I'm not going to trade dollar pairs today until the daily candle close. So I'll be looking for opportunity to trade dollar tomorrow, dollar pairs tomorrow. Okay, I want to wait for today's candle to close. Now, if you look at the chart, you can see that dollar has been bearish for some days. This will not be wise. This will not be the right time to sell the dollar. Okay, we should expect a retracement, probably candle. I'm sure dollar created a fair value gap. Okay, so if you are considering selling, you can see this fair value gap here. This will be a good area to consider to sell the dollar. Okay? If you want to sell the dollar, you might consider selling when price fills this fair value gap. I think on 1 hour also we still have a value gap above this on 1 hour time frame. Okay, so if you want to sell dollar, you shouldn't sell from the current market price. You should wait for price to pull back to this fair value gap. Okay, this is where you should be considering selling dollar. Okay, this is where you should be considering selling the dollar. So I believe if dollar is going to retrace to this fair value gap. Okay, because as you can see here, we have a shift in market structure right at this point. This is on 1 hour time. And after shifting market structure, price is expected to pull back to a premium area above level 50, Fibonacci level 50. Okay, it's above. So you can see the swept liquidity that was residing at this relative equal lows. All these lows, they swept the liquidity, and now the price is expected to pull back to an internal range liquidity, which is a fair value gap or liquidity void, you can see. So that's my expectation on the dollar. I'd love to see dollar pull back to this zone on it. Mr. Debayo, good morning. Good morning. Okay. If you have any question or any pair you want me to analyze, let me know in the comment section. If you have any question or any pair you want me to analyze, let me know in the comment section. Now, going by a 4-hour time frame, if I want to take a trade on the dollar, if I want to take on a dollar, okay, so this is what we have on 4-hour. If the current 4-hour candle closes bullish, if the current 4-hour candle closes bullish, okay, I need to go down to lower time frame. So if the current 4-hour candle closes, that candle will close by 2 p.m. Nigerian time. Okay, so let's assume that candle has closed. Let's assume that candle has. I would like to. I'll go to 15 minutes time frame. Let's say 15 minutes time frame. Assuming that candle has closed, the current 4-hour candle has closed, I would apply my Fibonacci from this swing low to this swing high. I want to see price pull back to a discount area. Okay, back to a discount area. So this is where I will be considering buying dollar. If I want to trade dollar today, this is where I will be considering buying dollar. Okay, I'd love to see it pull back this zone. Okay, this is where, and right now you can see we have this relative equal low. There's a high probability they will sweep this relative equal low before going bullish. There's a high probability they're going to sweep this relative equal low before going bullish. Okay, so if you want to buy the dollar today, wait for a sweep on liquidity or wait for price to pull back to fill this fair value gap. Okay, if you want to buy the dollar, wait for price to pull back to fill this fair value gap. Okay, wait for price to pull back to that fair value gap. If price breaks out from this fair value gap, it's most likely they will be going for the liquidity residing at this low. Okay, so that's my take for the dollar today. Look for opportunity to buy the dollar. Look for opportunity to buy the dollar. Patiently wait for price to retrace back to this fair value gap or sweep this liquidity before you buy it. Okay, before you buy it, wait for price to pull back. So as you can see here, you can see the dollar went into a range. We had this range in markets. You can see it went into a range, and you can see they've swept the buy side liquidity. There's a high probability they will come for this sell side liquidity. So patiently wait for them to sweep these lows before you buy dollar. I hope that is clear. If you have any question, let me know. Let me know if you have any question. Yes, okay, we have a fair value gap like okay, before this one. You should fair value gap at discounts, okay? Work gap at a discount. This one is above discount. This one is above discounts, okay? That's why I'm not interested in working with this fair value gap. The fair value gap that is at a discount, it has to be below Fibonacci. It has to be below equilibrium. I hope that is clear. It has to be below equilibrium. Okay, so this is where you should be looking for opportunity to buy the dollar. With what I'm saying here, there's a high probability they're going to sweep this liquidity. This liquidity will be swept. Okay. Next is yen basket. Yen basket. What's my take on yen basket? Yen. What can you see? Okay, what can you see? Let's start with the daily time frame. Daily. Okay. Okay, so what can you see on the daily time frame? As you can see, let's see the weekly. Okay, so this is the weekly. Several weeks ago, I told you guys there's a high probability yen would come fill this fair value gap. So going by the weekly time frame, the yen is bearish. Yen is still bearish. Okay, yen is still bearish. It's still bearish. Now let's go down to daily. So yesterday, you can see what played out yesterday now of this pattern we had here. After the formation of this pattern, if you go down to daily, a fair value gap was created after the formation of this candle. Price pulled back yesterday. Okay, price pulled back. Let's go down to time frame. Price pulled back yesterday to fill the fair value gap. So we had this on 1 hour time frame. But as you can see, price broke out from this fair value gap on 1 hour. Can you see this fair value gap on 1 hour? It broke out from that fair value gap. That indicates that there is a fair value gap above this 1 hour fair value gap on a lower time frame. That's the reason price broke out from this 1 hour fair value gap. So let's go down to lower time frame. Let's say 15 minutes and 5 minutes. There's a fair value gap above this 1 hour. That's the reason price. Okay, so this is 15 minutes time frame fair value gap, which is almost the same with the fair value gap on 1 hour. Okay, let's see. Okay, so this is 5 minutes. Also, we had this fair value gap on 5 minutes. Then I think we have to go down to 1 minute. We have to go down to 1 minute. There's a reason price broke out from that. So there's a reason. Find out why price broke out from the 1 hour fair value gap. question or any pair you want me to analyze, let me know in the comment section. My vertical line. Few minutes. This is what about trading view. If we're to be on empty, I would have been able to locate something I don't like I see. It was empty for, so you can see this up on 1 minute. Okay, you can see this fair value gap on one time from this gap. So that broke out from, let's go back to one. So you can see the reason price broke out from, you can see the reason price broke from 1 hour fair value gap. You can see because of the fair value gap, but also they swept the liquidity residing equal high, this equal high, you can see. That's the reason for this retracement, and that they have achieved. And as it is right now, I think is bearish. Yen is bearish right now. All right, UJ and gold. So you can see yen is on yen. Let's go to 4 hour. So you can see what we have here on 4 hour time frame. We had a shooting star. The next candle closed as a doji. You can see it closed as a doji, and the current candle is bearish. If this current candle bearish, that would be a strong confirmation. That would be a strong confirmation that yen would sell. That would be a strong confirmation for bearish yen. So it's likely coming to fail. If you can see this fair value gap, that will be the first target. That will be the first target for yen. This fair value will be the first target for this target. Fair value gap will be the next target for yen. Okay, that's my take on yen. I took a trade on GBP JPY. I'm currently buying GBP JPY. Okay, I'm currently buying GBP JPY, and that's because the yen is weak. If you've not executed a trade on GBP JPY, you patiently wait for 4 hours to close before you execute. Okay, you could wait for 4 hour candle to close. But let's see 15 minutes. Let's see if shifting market structure has occurred on 15 minutes. So what do we have here on 15 minutes time frame? We have investigation. I think. Okay. Yeah, this I respected the previous. Okay, and we had the shift in market structure at this point. Okay. So price might retrace back. You can see we have this fair value gap here. Price might want to retrace back to fill this fair value gap, before going bearish. Okay. So that's my take on yen. I am bearish on yen today. I'm going to show you the best level to enter a buy on yen. I'm going to show you the best zone to buy GBP JPY if you have not executed a buy trade on GBP JPY. Okay, so let's look at GBP USD. So GBP USD said, I expect a bearish move on GBP on dollar index. Okay, so let's start with the daily time frame. Okay. Okay, I expect dollar to be okay. So I'm expecting sales on GBP USD. I'm expecting sales on GBP USD. Okay. So you can see, I think this fair value gap has been filled, right? You can see this fair value to 4 hour. Let's see. So on 4 hour, we had this fair value gap on 4 hour. Can you see? We have this fair value gap on 4 hour, and you can see price has been respecting, the market has been respecting this fair value gap. You can see first attempt, second attempt. So what they did this morning was to sweep the liquidity residing at this previous high. The normal suited traders who have executed sell after the formation of these patterns. We had engulfing pattern here, we had X and here. The normal suited traders get sell, and their stop losses will be residing at these highs. So what they did this morning was to sweep the liquidity residing at that highs. So, and you can see the 4 hour candle, you can see this is a bearish reversal pattern. Can you see that? This is a shooting star. This is a shooting star. You can see that this is a shooting star. So GBP USD this week, before the close of the market this week, might come sweep the liquidity residing at this low. GBP USD might come sweep the liquidity residing at this previous low. So if you want to take any trade on GBP USD, I would suggest you go bearish. Suggest you go bearish on. So 4 hour previous candle close as a shooting star. Let's see 1 hour. Let's see 1 hour. Okay, so we have a shooting star. The next candle still close bearish. Let's see 15 minutes. Is there a shift to market structure on 15 minutes? We have a shift to market structure on 15 minutes. Okay, so we have this high, low. So the market is trading below this low right now. That's a shift to market structure. Okay, that's a shift structure. So this is what we have on 1 hour, 15 minutes, and 4 hour is a sell. You can see we have high, we have this low, we have lower high. Can you see we have lower high and we have lower low? Can you see this? Lower high, lower low. So by 15-minute structure, this is a bearish structure. This is a bearish structure. So you should be looking for sells and not buys. You should be looking for sells and not buys. Okay. If you want to buy, now this is 1 hour time frame. You can see that price is at a premium area. Price is currently at a premium area. If you want to buy, you either wait for price to pull back to a discount area. Okay. If you want to buy, you wait for price to pull from a discount area. I took from this point yesterday. I bought from this point and I closed my trade at, I think it was around this area. I closed my trade. I closed my trade at this point. Okay, so most people bought from this point. Most of them will be closing their trade because they are satisfied with profits they've made. So most will want to close their trade, and as they keep playing, price will drop. So if you want to buy, you wait for price to pull back to a discount area. You can see we have this fair value gap here, which is at a discount. We also have this fair value gap at a discount. These are the areas you should be considering buying. Buying from the current market price is at a very high risk. Very high risk. So that's my take on GUSD. Look for opportunity to sell. Look for opportunity to sell. Okay, if you have any question, let me know in the comment section. Okay, Mr. Tonda, UJ, okay, we'll look at that in a few minutes. So you can see the pattern we have on EU, similar to what we saw on GU. Okay, so start with the daily time frame. This was Monday, Tuesday, Wednesday. Monday, Tuesday, Wednesday. So what has played out here? First thing they did this morning or today was to come sweep the liquidity, which was residing at the high of Monday candle. It's residing at the high of Monday candle was swept today. That was the first thing. Okay, so also I think we have a fair value gap here. Let's go down to 4 hour. Let's go down to 4 hour. Let's see. Okay, so you can see the fair value gap we had here on 4 hour. And you can see, can you see that? We had this fair value gap on 4 hour. You can see that gap has been filled. It has been filled. And if you go down to 1 hour, I'm sure a bearish reversal pattern has formed on 1 hour time frame. Can you see? You see, we have a shooting star. A bearish reversal pattern has formed on 4 hour time frame. So on 1 hour time frame. So what played out here? After the formation of this candle, after the formation of this spinning top candle, the normal strategic traders would have executed sell. The impatient trader would have executed sell. Their stop losses will be residing at this high. You can see now when you're trading candlestick pattern, you're advised when you have a bullish spinning top as we have here, you're advised to wait for the next candle to close bearish. The next candle is the confirmation candle. Wait for the next candle to close. Most traders will not wait. Most traders will not wait. They will execute after the formation of this candle. So what they did here was to sweep the liquidity, all their stop losses. They swept all their stop losses, and you can see the next candlestick closed bearish. This is a confirmation for sell. You could also wait. You could patiently wait for price to close below the low of this candle before you sell. You could patiently wait for price to close below the low of this candle before you sell. Now let's go down to 15 minutes. Let's see what 15 minutes time frame. Okay, so this is minutes time frame. Okay, this is 15 minutes time frame. So we can see we have this support zone. We have this support zone. If you want to sell, wait for price to fill, see this zone. Okay, wait for price to break out from this support. Okay, wait for price to break out from this support. Now, what's playing out here? I think there's a fair value gap. It wants to fair value gap. It wants to. Okay, let's see. Minutes. There's a fair value gap. It wants to fill. That is the reason for the retracements. Okay, that's the reason for the retracement. There's a fair value gap. It wants to fill. Let's confirm on 5 minutes. So you can see this fair value gap on 5 minutes. Can you see this fair value gap? So this could be current pullback. Okay, this could be the reason for the current pullback. Let's see 1 minute. Let's see. Okay, on 1 minute also have this fair value gap. So this is the reason for the current. This fair value gap is the reason for the current pullback. Okay, you could patiently wait for price to pull back to this zone before you sell Euro USD. Okay, you could patiently wait for price to pull back to this zone before you take a sell on Euro USD. I hope that is clear. You can see on 1 minute time frame, we have the shift in market structure called here. Market structure. You want price to pull back to a premium area before you sell. I hope that is clear. So that's my take on Euro USD. Okay, let's look at UJ. Let's look at UJ. USD JPY should be bullish. USD JPY should be bullish. USD JPY should be bullish. USD JPY. So let's start with the daily time frame. You can see the pattern we have here on 4 hour. That's a pattern. Okay, so we had Monday, Tuesday, today, Wednesday. They've swept the liquidity residing at the lows of Monday and Tuesday candle. also swept the liquidity residing at the low. Okay, liquidity residing at the low of Friday, Monday, and Tuesday candle. So let's see the pattern we have on 4 hour. Okay, so this is 4 hour, and you can also see on the 4 hour time frame we have this fair value gap. You can see this could also be the reason for this retracement. Can you see that? So they fill this fair value gap, and let's confirm if we apply our Fibonacci from this swing low to this swing high. Okay, you can see price has pulled back to Fibonacci level 50. You can see pulled back to equilibrium. It has pulled back to equilibrium. Okay, so if the current 4 hour candle closes bullish, if it closes bullish, you could look for buys. If it closes above the high of this candle, this bearish candle, you should look for buy. Okay, you should look for buy, and if you are buying, you could target this level, this area of liquidity. Okay, this could be your first target depending on your risk reward. This could be your first target. Now, if you go down to lower time frame, okay, so let's go down to 15 minutes. I want to identify where price starts going up. So price started going up from this point, and the market is currently trading 151 points, about 40 pips. Yeah, from this point, about 40 pips from this point. So if you want to buy, I would advise you wait for price to retrace back. Okay, you can see we have this fair value gap here. Can you see we have this fair value gap here? You could wait for price to pull back to this fair value gap. Okay, wait for price to pull back to this fair value gap before you buy USD/JPY. Okay, wait for price to pull back to that fair value gap, or wait for price to break out from this high. But the best entry will be at the fair value gap. The best entry will be at the fair value gap. Okay, the best entry will be at the fair value gap. So if you want to buy when price breaks out from this high, you could risk 50% of your daily drawdown. Okay, you could risk 50% of your daily drawdown, wait for price to pull back, then you risk the remaining 50% when price pulls back to the fair value gap. I hope that is clear. I hope that is clear. I hope that is clear. So that's my take on UJ. Look for buys. Look for buys on UJ. You don't want to sell UJ from this point. You don't. This is where sell started from. Okay, this sell started from this point. If you missed this first move, if you have missed this first move, you had the second opportunity when price pulled back to a premium. You can see price pulled back to a premium at this point. It came to fill this fair value gap. You can see it came to fill this fair value gap. So this is the opportunity to sell. So if you have missed this first move, you missed the second move, then you should wait for price to pull back to it. I hope that you should wait for price to pull back to a premium before you sell. So right now you should be looking for buys and not sells. I hope that is clear. So let's look at gold. After gold, we'll look at GBP/JPY. Okay, gold has been bullish. Gold has been bullish, and gold is still bullish. Fundamentally, technically, gold is bullish considering what is happening in the United States. There's so much uncertainty. So much is happening in the United States now that is making the dollar weak, making a lot of us, invest in gold. In times of uncertainty like this, investors, the smart ones, will invest in gold because gold is one of the safe haven instruments. They would invest. That's why gold has been bullish for some months now. Okay, that's the reason gold has been bullish for some months. Investors are pulling their funds from the dollar to invest in gold because gold is a safe haven. They believe the value of gold would always appreciate. They believe the value of gold would always appreciate, and that's the reason for the strong bullish move or trend we're seeing on gold. So gold is still bullish, strongly bullish. Every sales you see is a retracement. You can see the bearish momentum is very weak. You can see all the sales doesn't last long. You can see it's just for short term, okay, short term. It is still very bullish, okay. But if I'm to take any trade on gold, I'd love to see a strong retracement to. Okay, so we have this fair value gap on 4 hour. If I want to take a trade on gold, I want to risk it. I would love to see price come back to fill this fair value gap. Okay, this is the most recent swing low. So let's apply our Fibonacci from this swing low to swing high. If you want to buy to a discount area, let's say if we have a fair value gap at a discount. Okay, so you can see we have this fair value gap at a discount. So this will be a very good, okay, this fair value gap. Okay, if you want to buy, you should wait for price to pull back to this fair value gap. Buying gold. Gold is still bullish. Still bullish. It's still bullish. I hope that is clear. I hope that is clear. Please give the video a thumbs up if you haven't done that. Give it a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. You get notified by YouTube. Okay, so let's look at GBP-JPY. Like I said, I'm bullish on GBP-JPY. Okay, I am bullish on GBP-JPY. So let's start with the daily time frame. Okay. So yesterday we had the Monday, Tuesday, Wednesday, the swept liquidity residing at this previous low. Liquidity was swept. So after the close of yesterday candle, if I'm able to identify a bullish reversal pattern on 4 hour, my bias for the bullish. So you can see the pattern we had on 4 hour yesterday before the market closed. Can you see the pattern we had? We had a bullish reversal pattern. Okay. We had a bullish reversal pattern. So what I did this morning was to apply my Fibonacci from this swing low to this swing high. Okay, applied after the close of the market yesterday, and price to pull back. I waited for price to pull back to a discount area. I waited for price to pull back to a discount area. You can see. I waited for price to pull back to a discount area. Let's go down to 1 hour so that you see it clearly. You can see. So I waited for this retracement area. You can see. That's the reason for the buy trade I took on GJ. That's the reason for the buy trade. So I'm going to more to this. I'm going to take more trades on UJ, but I would love to see price break out from these highs, this resistance zone. I would love to see 1 hour candle close above. If 1 hour candle closes above this zone, I'm going to take a buy trade, and this is where I'm targeting on GJ, this fair value gap, which is at a premium area. That's my target for GBP-JPY. So if price breaks out from this zone, I'm going to take more trades. At the moment, my stop loss is 20 pips below the low of this candle, 20 pips below. So the risk on this trade, on this first trade, is very high. It's about 70 pips. The risk I took on this first trade is about 70 pips. But immediately price breaks out from this resistance zone, I'm going to adjust my stop loss to this point. From this zone, I would adjust my stop loss to this low, reduce my risk to less than 30 pips. That will reduce my risk to less than 30 pips. Any question? Any question? Any question? Any question? If you want to buy GJ, you can wait for breakouts, wait for a 1 hour candle closes above this zone, this resistance zone, wait for 1 hour above this zone, or 4 hours should close in between this zone above, or a 4 candle should close in between this zone. You buy your stop loss here. So if you buy, let's assume you buy from this zone 202.24, your stop loss is at 201. That's about 70 pips, and your TP is at 203.29. That's 100 pips TP. That's about 100 pips. Okay, so that's it for this session. If there are no questions, do you have any question? The video a thumbs up. If you haven't done that, give it a thumbs up. Give it a thumbs up. Any question? Any question? Do you have any question? Thank God for a good network today. Do you have any question? Do you have any question? Let me know in the comment section if you have any question. If you have any question, let me know. Let me know. Do you have any question? Do you have any question? Any question? All right, John. So we've come to the end of today's session. I wish you all a profitable trading day. For those of you in the VIP group, if you have any question, if there's any pair you want me to analyze, please let me know in the drop a comment, drop it in the group. I would attend to it. Okay. Thank you for watching, for participating. I wish you all a profitable trading day. Please ensure you apply stop loss on all your trade. Apply proper risk and money management. It is very crucial to your trading success. Always apply stop loss. Always apply stop loss. If you do, you will not blow your accounts. You will not blow your funds. If you apply stop loss and every trade you execute follows your plan, you will not blow your account. You will not blow your account. Please have a wonderful day.